Okay, in this video we're going to go over market limit stop orders, which is trading assignments 1, 2, and 3 for our course. And what we're going to do is we're going to enter them in the Interactive Brokers Trader Workstation. So I'll also talk a little bit about just aspects of entering these orders particular to the Trader Workstation. Before we jump in, note that I use the classic Trader Workstation. You might have Mosaic as a default. Feel free to use that, but I always use the classic view. So if you want to switch to what I see, then just hit the button down there. Good. So in trading assignments 1, 2, and 3, let's go to trading assignment 1. Trading assignment 1, we're just going to enter some orders. I don't care how you do it, and then we're going to record some information about these orders. So let's jump in, and I'm going to just enter some orders for, I'll go ahead and just enter them for AMD. Right. So the first thing to realize is I type AMD, the ticker, in this financial instrument, and a choice comes up, and a lot of students just tend to just spam the enter key here and not kind of read it, and that would be fine in this case because I happen to want what's up here at the top, the advanced micro devices listed on the NYSE, and I want their stock. I don't want their options or anything like that, so just hitting enter is fine. Note that you can't always hit enter. If let's say later you trade crude oil, well, crude oil is ticker CL on the NYMEX, but it's also ticker CL on the New York Stock Exchange. So if I hit CL, CL, Colgate-Palmolive, on the New York Stock Exchange will come up first, and I don't want that, so I'd have to go down here to get crude oil futures. And you can also trade, it's also Republic of Chile bonds and so forth. So definitely when you hit that in the financial instrument, pay attention to what comes up. Right, so we want to go ahead and enter an order here. There's a lot of ways to enter an order. I can kind of go over to AMD here and hit this, and I have buy and sell. What I often do is, I'm going to go ahead and buy AMD. So you buy at the ask, so I can just click the ask there, and then I have some information to fill in. I want to buy. I'm going to say buy 200 shares. I'm going to actually change it to a market. So day doesn't matter, but day means we'll use this in a little bit. If it's not executed, this only matters for a limit or a stop order. If it's not executed, cancel it at the end of the day. That's what that means. Or let it continue for the next day and so forth. That would be good. That would be the GTC, good till cancel. Smart. Now, it's interesting. It's sort of an advantage of Interactive Brokers, but you can specifically route your order to an exchange. Not all brokers allow you to do that, or you can just use the default smart routing, which is, I guess, Interactive Brokers their own protocol for finding you the best price. So you can, like I said, you can either send it to a particular exchange or you can have it just smart routed. So I'll leave it as smart routed here. And hit transmit. And a bunch of information will come up here that confirming the order and so forth. I'm going to actually don't display this again, but you can confirm the what is greater than your current position. That's fine. So I guess I have a current position AMD. So you can confirm this, transmit, and now I guess I was short. Sorry. From earlier trading, I obviously had a short position of 150 in AMD. So when I bought 200 shares, I just went to positive 50. Okay, that's interesting. Yeah. So that makes a little bit. It's probably not the best example. Let me go ahead and. What should I do this for then? I know I don't have any position in Riot blockchain, so let me do this. Good. So I'll tell you what. I'm gonna go ahead and buy 200 shares of Riot blockchains, and we'll kind of talk about the calculations for this. It won't hurt seeing two orders. Again, I tend to change this 200 shares. because students will often let it default to 100, but really in no part of these assignments are you going to only trade 100 shares, 200 day market, smart order transmit. Good. So now I own 200 shares. So you can go note that you can see your trades in this here. So, and this actually shows me where I shorted AMD previously. Yeah. So we're just going to look at this Riot blockchain, right? So so here's my order. Note, looking at Riot blockchain, the stock that I just bought 200 shares of, the order was split to 100 shares at an exchange island and another exchange, another 100 at a different exchange, IEX. Right. So when you're doing the assignment, and just in general when you're trading, right, notice that your order often gets sent to multiple exchanges, right? This is a very important aspect of modern markets, where your order is split up and sent, to wherever it gets the best price. This goes into our conversation on high frequency trading, right? This is what a lot of high frequency traders take advantage of. So yeah, but in this trade log you can see, where it was sent. Execution, fill, price, and time. This is just reporting some other aspects of the trade log. This will give you the average price, average over these two. It happens to be the same, obviously, in this case, and the time that it was executed. What else do we see in the assignment? Transaction cost. Now, what I'm going for in this transaction cost is, here you can see what you were charged in commission. So our commission was $1. Right. However, that is not the entire transaction cost. You also pay the bid-ask spread. So a lot of times people say, well, my cost to trade the stock was $1. No, that's what you paid to a broker, but there's also the payment to the market maker, which in this case is going to be small, but still, there's a cost there. And then when you trade more and more and more, this cost will get bigger. So what we have here is 1 cent, right, times 200 shares, right? So $2. But that would be if I bought and sold, and I only bought. So you could say that's where I'm doing this calculation here, which is 1/2 the bid ask, right? So what we can say is a half of the number of shares would be 100 times the bid ask, which is 1 cent, so just $1, right? So our total cost of trading is going to be $1 here plus $1 for the market maker, for the bid-ask spread. Now, of course, if I start trading more and more, right, if I had done 400 shares, then it's $2 to the market maker. If I had done, right, 1,000 shares, then it's, $5 to the market maker. So the more I trade, the more goes to the market maker, the more that goes to the bid-ask spread, right? So what I want you to do is include the bid-ask spread in your calculation. All right, size of the position in dollars. That's going to be easy. It's just number of shares times the average price per share. Good. So that covers the trading assignment 1. What we're doing in trading assignment 2 is I'm not just saying buy. Well, I do say just buy here, but I'm also saying place limit and stop orders, right? And specifically, what I'm doing in trades, in 3, 4, 5, and 6 is placing a collar. What that means is buying some stock and then putting in a price at which we will take profits, and then a price at which we are going to limit our losses. So buy the stock, put a limit sell above it, and put a limit stop sell below it, or short the stock. Right. In this case, I profit when it goes down. So a limit buy if I short the stock, it's a limit buy to take profits and a stop buy to limit losses. So I'll tell you what. Let's collar Riot, which I just bought here. So if I bought it at 111.48, right, then I want to take profits above it, right? So what I can do is I can say, okay, I'm going to go. Actually, I bought it. So what I want is a sell, right? And so I'm going to sell my 200 shares. And this, I say, place it at a place where it's unlikely to be executed. So we want this to sit on the book for days. So that's why it has to be good till canceled. And then it's a limit, and let's say 30. it was actually as high as 30 in the recent ramp up in cryptocurrency prices, but it's not hitting this 30 anytime soon. So now if I've done this right, the order should not be immediately executed. If you put the limit price in the wrong spot, right, it'll immediately get executed. But what I'm saying here is I own 200 shares, so sell 200 if the stock goes up to 30, right? So I transmit. It just tells me it'll be canceled at the end of the year, which is fine. And now it's sitting on the books, right? Not executed. Routed to, I guess, Island, it looks like there. So that order is good. So I have my order to take profit. Now if I want to limit my losses, I say in the trading exercise limit it to 20% below. I don't, this doesn't have to be exact, so roughly 10% is $1, right? So I can put this, roughly $2 below, so I'll just put it at like $9.50, which is fine. So let's go ahead and put a sell order in, but this is, again, it's going to be 200. Good till cancel again, but now I'm going to change this to a stop. See, if this may not show up for you, you hit bottom here and there's a lot of other orders that will show up, stop limit, market if touched, so forth, but we want the stop order, and let's put this at, we're just going to change this to 9. All right. So if this falls, it's not exactly 20%, but roughly, we're going to get out of it. We're going to sell to get out of the position, right? So transmit this. If I've done it right, it shouldn't be. It's fine. You can read that. It shouldn't be executed. So good. Now we bought Riot stock. We have an order in here to sell to take profits, and we have an order in here to sell to limit losses, depending on what it does in the future. Again, if you're also going to do a short position. In that case, I short the stock initially, and then I have limit buys and stop buys. Good. So I think that now what you have, obviously, is you have a fill price for these, but you have a contingent price for the, so my contingent prices, remember stops and limits are called price contingent orders. My contingent prices are $30.0946. All right, trading assignment 3. Here, we're just looking at a lot of ETFs. Note, I don't tell you exactly the ticker on the ETF. That's for you to find, right? But what I want you to see is if you want to trade gold, right? We can trade, later we'll trade gold on futures exchanges. However, you can trade gold with an ETF, right? You can trade the euro with an ETF. Again, these are exchange traded funds. The S&P 500, crude oil using the ETF. So, and this is I don't want to say, well, I'll say, within the past couple decades, innovation, right? Really in the last decade, people started trading a lot of ETFs. 20, 30 years ago, if you wanted to trade crude oil, you would have to trade, futures. But what markets have done is created exchange traded funds where people can trade crude oil, get exposure to crude oil markets without having a special account that has access to futures markets, right? So this is a nice innovation that financial markets have provided individuals. So these are for you to go through and find the tickers for these. The one I'll just give you is I also have you here buying bonds, right? And to buy a bond, right? I think the ticker in Interactive Brokers is UST. Yeah, so bonds, notes, bills. So now this is going to come up with, so if I'm saying, what do I tell you? Bonds. So just say greater than 10 years. Anything here is fine. So, you can do something like this, but this matures in 2020. So we want to have a maturity date. So you want to go here and choose a maturity date that is, something here, right? This. Let me say add. I also would want it tradable. I don't want Treasury inflation protected security. I don't want a strip. I just want, so this is strips, principal, strips, interest. I don't know if we've talked about this in class, but this is where you take a Treasury bond and the Treasury dealers, so like large investment banks, they'll buy these Treasury bonds and then they'll strip them into interest and principal. And so what this is allowing you to do is trade the principal of a Treasury bond and trade the interest. A lot of the principal and interest is also stripped in like IOPO securities and mortgage markets. But anyway, so what they're doing is stripping apart bonds here, which is a very common thing to do. We'll talk about why you do this in the future. To create zero coupon bonds and so forth, but we don't want them now. So I'll go ahead and add this. Okay, right? So, and then you can trade. So we've been trading stock, right? We can trade an ETF here. This will be one of the tickers you'll trade. We can trade an ETF just like it is a stock, right? So this is an ETF. This happens to be gold, right? So if I want to buy gold, I can just go in and do like we've done over the past couple of minutes. Similarly, with a bond, I can do that. Now, this is not the price. Note, this is percent of par. So this is 96.25391% of par, right? So a little bit of different meaning. But here's again the size. But we have a bid, an offer, and then the size of the bid and offer. Here, it's the number of shares of the ETF. Here, it's just dollars. So what do I tell? I say buy 50 10-year U.S. Treasury bonds. So that would be roughly 50,000. When you're buying here, you're just saying the face value. So 50,000 in face value, which might be a lot more or less. But you can go in here and buy. And so I'm just specifying face value here. 50, right? Day limits. Again, when you're working in markets like this, I would never put a market order, right? I don't know how liquid this. I could probably bring up the order book here. I wonder if that's interesting. I actually don't know if I can bring up the order book. Trading tools. Yeah, so it should be under here. So market depth trader. Okay. So it does look like I have a book here. All right. Yeah, so I don't know how comprehensive this book is. There's bond trading is a lot different than so this is an OTC interbank market, so it's not like I have a consolidated tape and I'm seeing across a lot of different exchanges, but it does look I can see that I have a book, I don't know, 18,000 deep or something here, which is interesting. Note that you can do the same thing for something like Riot Blockchain, and cancel. Yeah. So it's just saying we're not going to be able to see the book. It's saying I don't have access to a lot of different exchanges. So if I had the data, you would see a lot of other exchanges here, and so you would see a pretty deep book. But here, I just don't have access to them, so I'm only seeing the book at IEX. Which, wow, so the bid and ask on IEF are pretty far apart. That's interesting. It looks like I have a bid of 1141, 600 shares, and my ask is 1168, 700 shares. Wow. So it's not a very competitive book here for Riot at IEX. Okay. So anyway, you can buy it like this. What do I have here? 96.25. So I might want to put, I would put 22. We know this should be executed at the best price. So I can go here and right. So I guess is this no? Yeah, this is trading below par. So it's trading below par. So it's actually less than 48,000. So that checks out. Override and transmit. We should be able to buy this thing. Yeah, so we own 50,000. Actually, face value we own 40. Well, so it would be 96% of 50,000, 96.21094. That's the clean price. The actual, and which will be fine for the trading assignment. Okay, I think that's enough to get through trading assignment 1, 2, and 3, and just a general introduction to trading on the Interactive Brokers Trader Workstation.